Hi guys, I'm Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. I'm recording this on Friday, March 10th, just after 12 o'clock. So we're going to talk big picture, some of the macro stuff, get into what's going on in the financial system, and then we'll move on to some individual stocks. Really the big news at the beginning and the middle of the week was going to be about Fed Chair Jerome Powell's testimony. He was speaking before the Senate Banking Committee on Tuesday and the House Financial Services panel on Wednesday. So he did those. He sounded more hawkish than he did during his February 1 press conference. Again, that came right after his meeting with the FOMC when they raised interest rates by 25 basis points. So the highlights from the testimony, or possibly the lowlights depending on your perspective, he basically said, the process of getting inflation back down to 2% has a ways to go and it's going to be bumpy. The latest economic data continues to be stronger than expected, meaning interest rates may have to go higher than they thought. And the Fed is open to increasing the pace of rate hikes if the data continues to show faster tightening is warranted. So not exactly what we wanted to hear. Those of us that want to see the market go up, of course. Bottom line, the market had been pricing in just one or two more 25 basis point hikes. Now it's looking possibly for a 50 basis point hike later this month, followed by two more 25 basis point hikes, one each in May and June. Those probabilities are moving around a little bit relatively quickly, and we're going to talk about those in a second. But if that all happens, then by the middle of this year, the Fed's target interest rate range will be in the 5.5 to 5.75 percentage point range. Definitely higher than we were hoping a couple of weeks ago, and that's kind of why the market was struggling even during the middle of the week. If we look at what the 2-year yield is doing, you can see that it just topped 5% before giving a little bit back. And if we move on to the 10-year yield, that had been hovering around 4%, where it hadn't been since November of last year back here. But it's down quite a bit today, given the issues in the banking sector, which we will talk about in a second. But when you see this, when you see that the yield on the 2-year is higher than the yield on the 10-year, that's an inversion, typically a sign of recession or the end of a Fed tightening cycle. Typically, we don't see the Fed crank down the screws on the economy when it's facing a recession. But of course, this economy is somewhat atypical, and it has remained stronger than expected. So a lot of the data continues to be too good in the eyes of the Fed, which is not exactly what we are looking for. That 10-year yield today is probably down because of what's going on in the financial system, potential risks of a credit crunch going up. So moving on to that. So kind of middle to end of the week, Silvergate Capital, a crypto-focused bank, announced it's shutting down and returning deposits. It's a crypto central bank, so maybe didn't want to read too much into that, but we have seen some spreads. So yesterday we saw shares of Silicon Valley Bank, SFB, which is used by a lot of startup and venture-backed companies. They traded down around 60%. It's off again today. As we worked through the morning, we heard news that some of their clients were looking to move funds elsewhere. Also, the Wall Street Journal reported that SFB is looking for a buyer. Now we're hearing that the FDIC has stepped in. So kind of a messy situation, evolving relatively quickly there, though. But if we move back from individual banking names and we look at this, the regional banking ETF, the KRE, that pretty much tells the story. So there's definitely some stuff going on. And it's not just in the smaller regional banks, financials, larger cap are getting caught up as well. The XLF was down around 4% yesterday. It's off a little bit today as well. So definitely something to keep an eye on whenever we see turmoil in the financial system. It becomes an issue for the market. On the other hand, it could be exactly what's needed to get the Fed to back off. So we'll hear more about that in a couple of weeks when the next FOMC meeting occurs. As far as big news this morning, so we had the February payroll employment report. Non-farm payrolls came in again, stronger than we were hoping. 311,000 versus 223,000 expected. again, it's one of those situations where good news is kind of bad news because it gives the Fed more increases the odds that the Fed will continue to hike, basically. So the market was up a little bit this morning, down now. We're just going to have to watch and see how it goes as we move into the afternoon and into next week. Again, next week we're going to get CPI and PPI inflation readings. So that is definitely going to be big on Tuesday and Wednesday. And then the week after next is when the FOMC holds its next meeting. And the current odds are around a 40% chance of a 50 basis point hike. So that was around 60% last night. So again, those odds are moving around based on what we're seeing develop here in the market. All right, let's move on to stocks. So as you might expect on a day like this, some of these charts that looked great 3 days ago are looking just mediocre today. But we're going to jump in. I have 5 small cap names for you that have been on my radar that I think have interesting stories. And of course, if you choose to get involved with any of these, make sure you do your own research, please. So we're going to start off with UFP Tech. Ticker symbol here is UFPT. Down at the bottom here, you can see this is the trading volume. And then there's some financial results here for the last 3 quarters. Earnings per share and revenue numbers. But just looking at the chart here, you can see that UFPT has been a pretty solid performer for some time now. And even going back to the weekly chart, over the long term, the stock has done extremely well. What it does, so it's packaging largely for medical device customers. So in the fourth quarter, which was just reported a couple of days ago, revenue was up 62% and earnings per share was up 162% to $1.10. It looks like revenue, analysts are only expecting revenue to be up a couple of percentage points this year, but this is one of those stories where there's more than meets the eye. And as I said, the stock has done very well over the years. So it's holding its own given what's going on in the market right now as well. Next up is Samsara. Ticker symbol here is IoT. So it's a software company, software and hardware that connects vehicles, equipment, buildings, all that stuff. Kind of helps customers keep track of things, lower their costs, reduce risk out of their businesses, etc. Company had a big quarter. Fourth quarter result was very good. Revenue was up 48%, and analysts see sales up around 30% this year, and then break even on the bottom line on earnings per share next year. So that is Samsara, and again, a nice reaction to earnings, and we're looking for this. I'd be looking for this stock to hold, hopefully not much lower than where it closed after the earnings breakout. Next up is Exponential Fitness, XPOF. I talked about this company a little over a month ago. They are one of the largest franchisors of boutique fitness brands in the US and growing internationally as well. So they had a strong quarter. As you can see, the stock jumped after the report. Revenue was up around 44%, and it looks like should be up around at 18% again this year. And then earnings per share turning positive. So analysts are expecting around 92 cents per share in earnings in 2023, which compares very nicely to a loss of 7 cents last year. Next up is SIBN. Ticker symbol is SIBN. So this is a medtech company. They have solutions for lower back pain. Their main technology is called the iFuse solution, which fuses the SI joint to treat joint dysfunction. Their fourth quarter result beat on both the top and bottom line. You can see here, stock had a nice reaction. So revenue in the quarter was up 27%, and analysts see around 22% revenue growth in 2023. What I would be looking for here is for SIBN to hold above this overhead resistance area that held in July, August, September, all the way through October. Had a nice breakout above that, and right now at 19.4, it's barely holding above that. So we'll see how that goes. But so far so good for SIBN. And then last but not least is an oil name here. This is Technip FMC, ticker symbol FTI. Market cap of around 6.5 billion. Obviously been a pretty good market for energy names. So they make equipment for offshore oil and gas production. They had a nice fourth quarter. Revenue was up around 11%. Should be up about that much again in 2023. We're also looking for earnings per share to turn positive with around 50 cents expected in earnings this year. That's up from a loss of around 3 cents in 2022. So that's the last stock for today. Of course, as I said, do your own research if you choose to get involved in any of these names. And again, we're going to be watching the financial system, the financial stocks, and hoping to get some resolution and see the market strengthen, or at least prove to be resilient next week when those inflation readings come out. Okay, have a nice weekend. We'll be back in touch next week. Take care.